everyone, welcome to this masterclass. My name is Simon Snelder and I will be presenting to you. So today we're going to talk about what are the best investments in 2023. Before we start, I will just guide you a little bit about what you can expect and also the setup for this coming hour. So I have for you a very short introduction about myself. So I am around 10 years in this industry where I help other people to give them good investment advice to grow their money. And I have been doing master classes now for quite a while where I talk about different topics. And I'm also contributing in the media about an input on investments and on all kinds of topics. If you Google me, you will find more information on that. I work with clients all over the world, so I don't have a certain type of regional outlook. I look at things that are happening worldwide. And about myself personally, from the Netherlands, I'm married, and I've been living now as an expat approximately more than 10 years, and I like to travel. So that's a little bit more about myself. During this session, if you have any questions whatsoever, there's a chat box, so everybody's unmuted. Please feel free to ask me any question you might have during this session. So as I said earlier, I've done a variation of different masterclasses. Last week, we were having a masterclass about corporate tax. We were having about well-being, art. The month before, crypto, you name it. If it's interesting, we will dive into it and we will try to bring to you a good session. And over the course of years, we had more than 1,000 live attendees, and we like to have it engaging sessions. So if you have any questions, they are very appreciated. And if you want to see some of the recordings that we have done in the past, you can go to my website, simonsnelder.com, or you can go to my YouTube channel, where you will also find a certain amount of them. So everybody that attends this session will receive an email from our tech partner, Cluely. And in that email, they're asking you to claim your credential. So on your personal email that you received this invitation from, you will receive that email from them, from Cluely, and they will ask you to activate your account. If you do that, you can view and download your personal certificate for attendance, and you can share it if you want, or you can store that. And this is something extra that we are giving to you. It's, of course, it's voluntarily if you want to proceed with that and claim your certificate, but the certificate will be sent to you after this session within 48 hours. I see already a question from one of the attendees. He's asking, please share previous class session details here. Sure, I will right now for you. I will right now where you can find it. You can go to the website. I will share it here, simonsnelder.com. I will send it here to everybody. And there you have the previous classes, sessions, and all the details there if you go to the website. Now, this session is made with the idea for you to walk away with it, with that you have more valuable information for your investment journey. Because either you are invested already or not, the most important thing is that you feel that you can invest better. And that is always a journey. It doesn't happen that you know everything at the same time. So therefore, I think that what is valuable during this session is that you grow your wealth faster. So no matter how much you have, it's important that you consistently keep growing it. It will be in your best interest. You can become financially free because at one point, your wealth will be so much, or at one point it will reach a certain amount of capital that you don't have to work for money anymore, for a salary. And you also will learn in this session how the super rich invest, because we look at them as a benchmark, because typically they have access to information and they're more sophisticated investors, and their returns are also better. So we want you to see the investments that make between 10 and 20%, that's group one, and investments that make more than 20% per annum. And also understanding the differences between the different type of investments, which asset classes they have, how they work, the components in it, and the different factors that make them unique and also different from each other. So I have here a follow-up question, so I'm just going to read it. Did this, Savaria is asking me, did this class or any other class give information on buying properties or investing in other investment products? Yes, good question. Actually, I have a good announcement for you. The next masterclass will be about Dubai properties. So we will have an expert that will be a speaker and will be engaging together with me about Dubai properties. We have done already a session about Dubai properties, UK properties, and also we have covered Berlin properties. We have also covered real estate in the US, and art investments we have covered. We have covered fixed income and stock market incomes in previous masterclasses. So that is something, and also we have talked about cryptos. So maybe this is one of these topics could be of interest for you. And a follow-up question is asking comparison investing in properties with other investment options. Yeah, so there's also more information there about the returns of each asset class and compared in brackets. And on average, you can see then where you like to be and what fits you the best. So I have here actually a poll question, which I like to know from the people that are here. So if you could please just take a second to answer this question. Have you ever invested before? Because I would like to know for the people that are here live, where are you standing in your journey? Have you invested before? Have you made many investments? Or are you really new into the investment world? So if you could please take a moment to just share your journey. I see that so far 30% has voted, 50% has voted. So I'm just going to give it a second until I get some more votes. And then I will show you as well what the results are. This is anonymous, by the way. I'm not going to share who said what. It's just that everybody can just, if they want, say what the investment journey has been so far. Okay, I'm going to close this one, and then we can see the scenario. And I'm going to share the results. So I have shared the results. If you cannot see it, please let me know. But I'm going to read it out loud. And that is that 40% says that I've made some investments so far. 20% says that I've made different types of investments. And 40% says they have not made any investment so far. So we have quite a diverse group here, which is interesting. And that is good to know. Okay, so if you can see my screen now, I will go back to explaining more about why it is important that you select good investments for yourself. Because if you make a different type of returns, it affects your wealth. So you can see here, hopefully, that an average return of 5% on $100,000 will definitely grow your money. And that is definitely something that is positive. But will it grow your money in the fastest way possible? Well, it depends against other benchmarks that are out there. So we are going to discuss options that are giving 10% and also 20% or more. So it's fair enough to also have that available here as an option for you to see how much return that gives. So therefore, I am bringing back the screen. I'm sorry, I had a little bit of a technical glitch that I saw that I was not sharing the screen properly. So I hope everybody sees the screen properly now. So if you can see here, if you have $100,000 invested with 5%, that gives you a little bit more than $160,000, which is good, right? You walk away with $60,000+, and that is your profit in 10 years. If you're making 10%, that profit is 170,000 plus. So instead of 60,000, you're making now $170,000 plus net profit. So that's already almost 3 times more. If it's 20% per annum over a course of 10 years, with the same 100,000, your 100,000 grows to 626,000 net profit. So 100,000 plus 626 is 726. So that's why you see that figure there. But your real profit is $626,000 because you invested $100,000. That is significantly more than $60,000. It's just a huge difference between that. And that's why it's important for you to know how you can invest your money properly and grow it to figures like that. And that is the focus of this session, to make sure that you walk away from this session having at least one or more options where you say, hey, if I invest my money in such a type of investment, I will make much more growth on my wealth. So I want to also talk with you about the type of criteria that I think are important to consider, the ones that I have selected for you. So I have considered different type of investments that qualify in those two groups, and it needs to at least give consistently 10% or more per annum. If it doesn't do that, then I have dropped them out of today's session. Also, it's important to understand, is it going to be a one time that they give 10% or more, or is it going to be really like something you can count on for a long time, for a long period of time? That is also a strong consideration, because there's a lot of investments that make one time 10% or one time 15%, but then the next year that doesn't happen. So those are the ones that I don't want to include. And the risk factor is also important. Are you risking a lot of your capital to make a double-digit return, or is there a scenario where actually the risk is not significant or the same as other type of investments? And that's why you need to look at the track record. You need to do some due diligence on the securities, on the protection, and you need to look, very importantly as well, if it's recession proof, because there's always cycles in the economy. There is good years, and then everybody's happy and everybody is not going to complain about the situation, but there will be also downturns, even recessions, and then typically investments perform differently. So that's very important also to see how they perform in different cycles, not only in the good years, but also in the bad years. And anybody that has questions so far, please feel free to ask me. This is an open session. I'm not just here to talk alone and nobody has to respond. So there has been some questions so far, but I really appreciate if more people would like to ask any questions. Okay, so which investments did not make it? And this is, I'm going to explain you why I put these ones here, okay? It doesn't, and please be patient with me before you tell me your thoughts on this, or before you say I agree or I disagree. So fixed deposits did not make it. It's pretty obvious. The interest rates are not yet double digit, and I don't think we will see double digit interest rates for euros, dollars, pounds, and strong currencies like that, like dirham, etc. So the likelihood that you can make 10% or more is not there. Government bonds are also not there. Government bonds are issued on a fixed interest rate, either for maximum up to 25 years, minimum is for like 6 months. None from the proper governments in the world have a double-digit interest rate. And typically you should be very cautious if you see that a government is offering you like double-digit bonds, because then there's really a question about how will they repay you back that money, because they're paying so much on cost. The stock market is something that can give double-digit returns, but I don't think it will consistently give double-digit returns, and it's unlikely that 2023 will be one of those years. So that's why it has not made the list of the ones that we will be discussing today. Real estate can definitely give double-digit returns, and also it can do that consistently. But I am stressing out that all the investments that I'm discussing today are unleveraged. Unleveraged means that you're not taking money you're not borrowing money to invest more money into the investment. So if you will look at a cash investment into real estate, cash only, then the figures look different. And because real estate is on this list, I've put it on this list as a to not discuss, is because one, we're going to have a session next month about, for example, Dubai real estate. That's the next masterclass. And also, it is very important to know that overall, there are good markets in real estate where you can make double-digit returns, also projected for a longer period of time. But it's not, you need to be specific about where you buy. Even if you are in a market where there's a strong growth going on, you need to know which area, etc. And we had a long period of time of where real estate was going up for many years. So there's a lot of real estate areas in the world where there's a bubble, and that's why it's being put in this group. Crypto, it's also not going to be discussed today. I'm not saying you cannot make profits on cryptos, but we have seen last year as well that you can make big losses as well. And it's not something that consistently you can say this is what's going to happen over and over and over. So the only one that I'm giving a disclaimer for, that under certain circumstances you can make 10% or more, is real estate, but because it's going to be so specific to explain to people which areas, how you do it, etc., that I'd rather take a separate session for that to explain that. So the first ones that we are going to discuss with you today is fixed income. So there are fixed income options that give you 10% or more. And the nice thing about it is that they will contractually agree on this. So you don't have to actually wonder how much you're going to get. There will be a contract between you and the institution that you are going to invest with, that they say, okay, if you're going to put the money for 1 year or 2 years, you're going to get, like, for example, 10% or 14%, and you're going to get it, for example, paid every quarter. And that allows you as an investor to know exactly to the date what your return will be and how much your return will be. And also, the ones that I have selected for you are the ones that are also recession proof. Because what I don't like to do is to select options for you that will be having a struggle during recession when it comes to this specific asset class. So I'm going to highlight two options specifically with you that you can have a look at. So this is a low note that is giving for 1 year 10%, and another, if you do it for 2 years, it's giving 11%. It's paying out quarterly, so every 3 months it's paying out 2.5% or 2.75%. And this specific one, what it does is it borrows money to law firms, and those law firms help clients to claim money from insurance companies and banks, from parties that actually should pay people, but the people don't have the money to start the process, the legal process against them. So what this option does is they provide that initial amount that a lawyer needs to start make a case. Now, it's a very interesting type of investment because on one side, you help people to get justice and to improve their financial situation, because they will claim, and they have, so far to date, there's been more than 33,000 claims being made, and every single one has successfully been processed, so there's been zero defaults and everybody got paid so far. So that's great for people. And that's also a reason why the banks don't want to fund it, because they are one of the parties that are getting these claims against them. And there's different type of securities related to it. One is an ETA insurance, which means that the investors have the legal claim on the full amount that is going into during the process until they get paid back. There's also a guarantee on the written on the full amount that they give. So these type of investments are recession proof because it doesn't matter what happens, there will always be people that want to claim money from insurance companies and from banks because they have the law on their side, and the law dictates that they can claim money. The only difference is that getting your right or not depends sometimes if you have the capability to use the legal laws in place to execute that. So this is happening right now, and this has been happening for years. It has been performing very well, very consistently. So that's why I have put this here as an option for you to look at. Any questions you have, please feel free to ask me, because I'm repeating this over and over because this is an open session. I'm not here to just talk and talk and talk. If you want to talk yourself, I mean, not talk, if you just want to ask me a question, please feel free to do so. So yeah, somebody's asking, Sibo is asking, is there minimum investment for this one? Yes, the minimum investment which is set by the institution is 25,000, either dollar, euro, and pounds, because this one is set up in 3 different currencies. Omar is asking, does this mean it's risk-free or is nothing risk-free? So nothing is 100% risk-free, not even the money in a bank. You have seen this now happening the past couple of periods, that even banks are falling over. But what we have done is we have looked at the risk, and we have dived into worst case scenarios, like what if this happens, what if that happens, what if this goes wrong, what if that goes wrong. And it's very unlikely that that an investor, even if a lot of different things go wrong, will walk away with not recovering their money. And that's what we want. We look at these scenarios where a lot of things can go wrong, and then still an investor walks away with their money, and that's what I think is mitigation of risk, minimizing your risk, and the scenario where you're not going to lose money if things go wrong, or a very small chance. Now, if all these things happen that we actually look at, then you need to be also mindful that all your other investments that you have, they will be in really deep trouble, because a lot of things happen at the same time. There will be kind of a very big shock in the economy, and a lot of things are happening. So it's a very bad scenario that we look at, and then we look at how likely is it that you can walk away getting your money back. So this one, just to give you a little bit more details, it just shows what kind of things they found. I just want to highlight one because it's very interesting actually. So this car financing loan that they do is there's in the UK there's a law where if you go to a dealership and you buy a car, let's say you go to a BMW dealership and you want car financing, and they say, sure, you know what, why don't you contact this company or for your car finance loan, or and they don't disclose that they are getting a commission and they have a partnership with them, and there's a financial incentive in place with them, with the dealer and the company that is providing the car financing. Then the law says that you have right for compensation. So approximately, according to large surveys done, 50% of all the car financings done in the UK are not disclosed that they have a partnership between the dealer and the financing company. The moment the lawyer establishes that they have not provided proper notification to the person that is getting the car financing, that there is a financial incentive in place to work with a car financing company that they have been using, the dealership, then the law states that the person that took it should get compensation. So this is why it's a great way of using the law in a good way, and to quickly establish that there's been a mistake in the business setup between two parties. I have here some other question. Is it complicated to actually buy loan notes? Somebody's asking. No, it's actually not, because it's you can do it either through platforms. Now it depends on which, but not every platform allows them to have them, or you can do it directly. So directly means that you have an application, it's been submitted to the institution, and then they directly process it, and then they accept it, unless there's something missing, some document is missing, like for example your proof of address or something like that. A follow-up question from Rinded as well about this specifically is, and are there costs involved in buying process? No. This is the nice thing, I forgot to mention this. There's no cost involved for entry. There's no cost involved for while you are there, and there's no cost involved when you exit. So when you get 10%, it's 10% net. 10% net when you get paid out, and 10% net when you exit. So there's no AUM charge or hidden charge or whatsoever. This is net of any cost. The only cost, which is for everybody the same, is when a bank receives money, they sometimes take like a small little charge, but that's for every transfer. Even when your salary comes to your bank account, banks take a small charge for that. Now we're going to discuss the next one. This is a fixed income bond. And what this one does is it's a very so Savarai is asking me, sorry, I wasn't able to listen to the last 3 minutes. Can we have a separate session to discuss further? Yes, of course. we can do that. And also you will get the recording after this, so you can watch everything back. So this fixed income bond is I selected this one because this one is interesting for a couple of reasons. Now, first is that how do they make money? Because they're giving you 14%, 3.5% per quarter. It's a very attractive interest rate which they are paying, and it's the minimum period is 1 year, the maximum period is 3 years. If you participate in this bond, so the way that they make money is that they take 3 to 6% of the client's money. The rest is with a trustee. So a trustee overlooks the money, and a trustee is a special party that is looking only for the interest of the investor. So it's their bank account. They are representing the investors, and 3 to 6% of the cash that is being put there by investors is actually used by this institution to trade into towards the G20 currencies and 9 different portfolios, and they make very small trades, and they have algorithms and AI and people that make small profits on many different positions that they take during a day, and they make very decent money with that. Now, why is this interesting? Because on one side, you have consistency in terms of what they are paying and what they are doing, how they're making money. They're making good money for themselves. And but why I've highlighted this one is because of the security. So what does a security trustee do if they see that there's not enough money in place to cover the investors, the amount of money that they have put in? They will freeze everything. They will freeze all the bank accounts. So to protect the investor, because they always need to look at least once a month, they need to look at, is there enough at any given scenario that if something goes wrong, that we can return back the money to the investors? So you have automatically this big brother watching them, and they have like superpowers because they are allowed to freeze things if they see that there's reason to do so. It's also recession proof because the way that they make money with these forex differences between the euros, the dollars, the pounds, and other big currencies, there's always movement in these different currencies, and it's in the end it's also cash which they are taking positions in. So they are not speculating on assets which are worthless. No, they are buying cash in different currencies and saying that there will be a price movement slightly between this party and that party, and then they make a little bit of money, but they do that over thousands of different positions a day. So they make like between, like every small trade is like maybe $50, so they end up making $10,000s every single day because of their tactic, and it's been very successful. And here you can see how consistent they are in paying out. So they keep paying out consistently. This is an example where somebody has put in 125,000 and they've consistently received their payments. So this is something where it's important to note that, by the way, everything that I'm sharing here today, I've invested in myself. So it's not that I am just sharing something theoretically. I'm also practically sharing my own experience. So the consistency is there because it's a contractual agreed bond. So they are obliged to pay. If they don't, then automatically the trustee that overlooks everything will take action to secure the investor's interest. So that's a type of investment that can consistently pay out, also not only in 2023, but also in 2024 and 5 and 26, etc., more than 10%. If anybody has questions whatsoever, please let me know. I'm going to throw in another poll question. And the question is, do you have investments that make more than 10% or 10% per annum? Meanwhile, I got a question from Savaria. He's asking if this is a company, or organization, or private or a government. These are private institutions that have set up this structure. Governments, if they do that, then they are called government bonds. Okay, so I'm going to close the poll, share the results with everybody. So everybody can see that 70% says yes and 83% says no. So hopefully you walk away from the session having seen some options that could help you in your journey to make more money. Okay, now we are back. I'm not done yet because I have more for you. So I have another option that I like to share with you, which is really interesting, which is art investment. Now, art investment is important to share with you because if you invest in the right type of art, and that is contemporary and modern art, it's been outperforming many asset classes for such a long time, like the S&P 500 and other ones. It's just done fantastic growth. And that is because it's been always a small circle of people that have had the opportunity to invest in it, which were billionaires and very rich people, and also people that over generations have built up knowledge and connections into the art world. But it's interesting to see that there are also parties where you, as a normal investor, where you don't have billions or many millions, can invest in art and also manage to get very good advice on which one to select. And what you get then is, in this scenario, you get 100% ownership. So you decide when you buy it, when you want to sell it, and it's all under your name. So it's not fractional ownership. Now, the average returns has been between 20 and 25%. That depends on which type of art. So some art pieces have done more. Like I bought 2 art pieces that doubled in the first year in value. And that is because I got good advice and I managed to listen to that and act on that. Now, I've also shared that advice with some of my clients, and some of them also acted on that, and they also made more than 100% in 1 year, and others did not. Now, I have clients that are happier to just, go with very established artists, and then those are not that likely to grow with extreme figures. But definitely there's a track record here, which is consistently that you can make 20-25% per annum. See, here's a graph that just shows that, and you can see the figures as well. Over a course of 21 years, it just made 610%, this asset class. So there's enough evidence to support that this is an investment class where you can make consistently more than 10%, and then sometimes more than 20% if you go into the right type of investments, and you're willing to maybe not immediately make a quick buck, because these investments you can do for less than 1 year, for 1 to 2 years, or for more than 2 years. Now, typically, if you want to make more than 20%, you need to be a little bit more patient and wait maybe for 2 years or more until you can cash out. Yeah, so I got a question here about the previous slide about this one. So I'm going back before I'm going to discuss more the art. So there's a chance that this organization can be bankrupt or closed, or the owner or directors can take the money and run away. So the money is not with the company, with the institution. The money is in a trustee. A trustee is a separate entity which is regulated by one of the biggest regulators in the world to not let any money leave their account unless it is for the right reasons. And they also need to overview everything that happens with those transactions and with the money that they have. So only maximum amount that leaves the bank account is 3 to 6%. And from those 3 to 6%, they're watching very closely what is happening with that. Now, if there's a fraud or if there's a bankruptcy in place, then there is certain vehicles that will be put in place to cash out the assets from the company that they have. Now, this company, what were they doing? They were trading in cash. They were trading in currencies. So if they do something wrong, then what will be recovered is currencies. So pounds, dollars, all of that stuff, all of that will be liquidated and recovered. So it is the chance that you will lose more than 93% is already, or 93%, less than 93%, that's already very, very limited, brought to a minimum level. And the chance that you will lose 3 to 6% that is actually being used to make money, that's also limited, because it's not that they are doing reckless things with them. It's just that they are buying currencies for that, and then they have a mechanism in place to make money at that. So this is why I jumped back to this slide, because I got a question about this. Now I'm going to jump back towards the art investment. If that makes sense to you, then I will continue to talk a little bit more about art investments. So art investments is, you have three categories. You have blue chip. Blue chip is in this asset class. It's the Banksy, David Hockney. These are contemporary art and modern art artists that are the biggest in their field. And then you have established. So these are the established names, are the ones that have made a name for themselves. They're not the top tier yet, but they are, they are here. They already have a good track record, and they're not new into the market. And then you have emerging, which are new names, and they're coming into the market. And typically what you see is that you can make the highest ROI on emerging and established artists, and you make still good amount on the blue chip artists, but the risk is also the lowest on the blue chip artists, because they're the most sought after artists in the world in their sector. So there's a high demand for it, for you to sell it as well. So I'm getting a question: what's the minimum investment for option one? The 10% is 25,000. The minimum option for option two is 14%. I do need to disclose, because I went through this process myself, for the option two, for the 14%, that if you are not if you don't have residency in Europe, it's going to be a little bit difficult to do it in euros. It's case by case. Dollars is no problem. Everybody can do dollars, and pounds depends also on the case to case, because it's about the banks. The banks, when they receive money and they need to issue this, they have requirements from Europe for euros, and they have requirements from the central bank from the UK for pounds. and the ones that deal in USD, they are the most easiest when it comes to worldwide investors. And now, if we look at art typically starts around £30,000. This is priced in pounds, these art investments. So that's the minimum, and that's not really a maximum. Another follow-up question I got is, yes, if you have a UAE residency, it doesn't matter what nationality you have. You can invest in any option. It's just that this is part of the compliance part, that you also need to guide people properly into what is there, what is acceptable, what can be done. I will give you an example. I have a client that wants to do option 2 in euro. She's moving towards Europe, and she can only do it in euro until she has a European residence. So that will happen in a couple of months. So that is, for example, an option then to consider. You can participate, but you cannot participate maybe in all currencies. So the art is not the last one I have for you. I have also a pre-IPO. Pre-IPO, what happens with pre-IPO is that a company is going to do an IPO. They're planning for it, so they're preparing the paperwork. Typically, this is with Nasdaq. They're preparing the paperwork to go on with the SEC, which is the regulator involved. And regulators typically don't want limited shareholders. They want a pool of shareholders that own pre-IPO stocks. So what they do is they increase that pool by selling some of the shares that from early investors, so that they can increase the amount of people that are part of the pool before they go and do an IPO. Depending on which type of pre-IPO you do, you can either double your money or make 50%, because you're getting discounted prices. So the valuation is, for example, 250 million. You're getting shares at 150 million, and so if the IPO happens at 250 million price, then you're already making more than 50% of your money back. Now, of course, there's also a chance that when they do an IPO, it can drop, but you have built in a comfort zone that it can drop quite a lot before you are at break even. So typically you see these pre-IPO opportunities only for very wealthy people, investment banks offering this, but there's also ways how for smaller type of investments this can be done. With smaller, I mean starting at $50,000 to $100,000. Now, for some people that is a lot of money, but if you compare that with pre-IPO opportunities that investment banks offer, they typically want at least $1 million or more. So this allows entry into an asset class that if you have the right opportunities, it can give you more than 20%. Definitely. And then you have private equity. Private equity is also something to discuss. Now, of course, it doesn't mean that every private equity opportunity is going to give a lot of money, but just to give you an example, there was a private equity opportunity that we came across with. I also participated in it, and the projected return is 3x to 4x. That's how they work. They work with X's. So 3x means 300%, 4x means 400%. Now you have put in 100% yourself, so you're making 200 or 300%, and in this case the exit was projected to be in around 3 years. So if you look at these type of investment, you can make really a lot of money if they happen the way that it is planned. And that is because this is an asset class where you typically don't start to do this with your first type of investments, but you do this when you have done some investments before, and when you come across unique opportunities or very good opportunities, or if you have already experience in private equity, then you kind of like to deal in that more. So this is why I've highlighted that, because it is something that is not often discussed. This is not a venture capital type of funds. No, you own the shares yourself. You get it notarized. You are a shareholder, but the difference is that you can yourself participate in opportunities that can make exceptional returns. Yeah, so Omar is asking, how are these opportunities presented usually? So they are presented usually where the prospect, the person that is interested, they sign an NDA, and then they get more information. So then they get a presentation with all confidential information about what you can expect and what the direction is. Personally, we come across unique opportunities, but we're very selective. So we had one where at the start of the year, it was a great opportunity. Maybe it will be the only opportunity that I come across with this year, because there's no point in sharing something just for the sake of sharing when there's no good opportunity there. But if there is an opportunity, then typically if you express interest in this asset class, then I can share them with you in the future. Okay, Karim is saying that I hope that he joined the masterclass later because of work. Do you mind sharing the presentation after? Absolutely, Karim. Don't worry. There will be a link sent to you with recording, and then you can watch it back at any given moment that you want. So please feel free to do that. I understand, sometimes you plan to take an hour off to watch this, and then last minute meeting comes in, and then and your day just fly by. So don't worry for that. There's a recording available. Will be shared with you everything we have discussed. That's why it's also very important that people ask questions, because then you can also see the Q&A session, and then typically you dive deeper into the subject. Now, I have shared these opportunities because I think that overall it's important that everybody has a broader idea about what kind of opportunities are there, which one make 10% or more consistently, which ones can make more than 20%. And this is important because, like I said in the initial discussion where I showed an example, if you make 5% on $100,000 and you invest $100,000 for 5 years, for 10 years with 5% growth, after 10 years, it will be in total amount, including the 100,000 that you had, 260,000. But if you have 20% growth, it's 720,000. And if you have 10% growth, it is around 260,000. So it's very important, you don't have to aim for the highest growth possible, but it's definitely nice if some portion of your investments, let's say you have, for example, 400,000. What if 100,000 is growing with 20% or more? 100,000 is growing with 10%. Then you will have in 10 years, you will have $1 million just with those two investments that you did. So 200,000 will grow into $1 million, and then you still have $200,000 left that you can play with or use or leave it in the bank for an emergency, or invest somewhere else. That's up to you. So these examples just show you that it's very important to find investments as well that perform, that can make you good profit, and that will make you only grow your money faster and reach your goals even easier than if you are in investments that don't make you good returns. Please let me know if you have any questions left for me, because I would like to know if there's any question by anybody that you have not asked me so far. This is your moment to ask me. If not, then feel free to contact me. Omar is saying, can you maybe add on each slide somewhere the minimum investment amount? Yes. So I will just quickly go through it one more time. So this minimum investment amount here is 25,000. That's the 10% one. 25,000 is the minimum. For this month, the minimum is 50,000. And for art, the minimum starts around 30,000 pounds. And typically with pre-IPO and private equity, it's around 50,000 to 100,000. Okay, Karim is asking questions. With today's market, how can we project growth of 10% or more? Yes, so today's market is affecting not all investments. So it's affecting, for example, the stock market. It's affecting maybe some other markets. But these investments, for example, that's earlier we went through it, the fixed income and the low note, they're not stock market related. So they're recession proof. They're distancing themselves from what is happening there. And art investments, I will tell you, for example, a story of one of the art investment. In 2008, there was Lehman Brothers went bankrupt, and in Wall Street, they thought the world was ending, and that the day that happened, David Hockney, which is an artist, went to sell his painting on an auction, and he set a new record that day. So what we typically see is that during bad markets, when people are worried about their market, money moves in a direction. The only way you see that the stock market is going down is because people are taking money out of the stock market. But where is that money going, right? It's not going to just sit in the bank. It's going to move somewhere. So we also follow those trends, and there's a lot of money moving into art, especially during difficult times. So if you go through this presentation, Kareem, you will see also the reasoning behind each investment, why they give consistently 10% or more, and also why there are opportunities that can give more than 20%. Well, thank you everyone for taking your time to be here. I really appreciate that. I mean, you guys make my day by just asking me questions and being engaging. Really, you have no idea how much I like that. So thank you very much. It was great having you all here. Have a lovely day and goodbye. If you have any questions, please feel free to reach out to me. Goodbye.